Well, welcome everyone, and I'm so delighted to have three amazing panelists here to talk about US capital in Europe. So according to PitchBook data, this year, almost a quarter of European VC deals have featured American investors, which is up from just about 20% last year. So we have seen quite a significant increase. So I want to start off broad, perhaps with you, Meera, first, and then we'll go along down the line. Why are more US investors looking at European startups?
I mean, I think a lot of the truth is in the numbers, right? Like, Europe has seen phenomenal growth in terms of the outcomes, but also these companies that are hitting, similar inflections, or arguably in some instances, even more impressive inflections than their US counterparts. I think as we think about revenue growth today, right, it's not just how quickly can you go, but how durable is that? And I think we see a lot of durability in the European ecosystem, which is exciting for a lot of us. I think the other thing we've really seen with kind of across the continent is this greater propensity to go risk on, move to the US earlier from a go-to-market perspective. And I think with a lot of funds, let's take Redpoint, for example, our mandate is to invest in these global businesses, again, that think of the US as a core market. And so it is easier than ever for us to do that earlier because of how they are approaching some of these team-building exercises, go-to-market approaches, what have you.
Mm-hmm. I think for us, one of the most interesting things is like the density of talent that you can find in Europe is very diverse. I've been spending a lot of time in the Nordics, Stockholm in particular. It's been like a great surprise to kind of see this ecosystem kind of grow up with companies like Lovable, Legora, Tandem Health. And once you have that mindset and being able to kind of believe that you can build global companies, that kind of like spreads. And it's been great to see that ecosystem grow. Another one that I'm very excited is Munich. I'm spending a little bit of time there. There's programs like CDTM, even in Zurich as well with ETH Zurich that like provide this technical talent that have global ambitions. And one of the things that we're designing is like how do we create like a bridge for these teams to kind of come to the US. And I'm going to get into more detail later, but just the density of the talent in Europe has been very surprising. And for us, having invested in companies like 11 Labs or Black Forest Labs, we want to continue that trend and continue to support these companies.
Yeah, I think I agree with all that. I'll date myself in saying this, but I've been with Bessemer for 20 years. I made my first investment in Europe in 2006, and when I compare the ecosystem then to now, it's just incredible how dramatically it's improved. And I think in particular, and so we, at Bessemer, we have this thesis. We started our London office about 4 or 5 years ago because we had this view that innovation is borderless, and there's the Bay Area has no monopoly on innovation. We were starting to see amazing companies emerging from all sort of pockets of Europe, and I think now in particular, I'm at least of the view that like Europe's having a moment, and that I think a lot of in particular in areas of defense tech, we're seeing because of what's happened in Ukraine, the way that geopolitically kind of the U.S. and European relationship has shifted. We're seeing a lot of exciting companies emerge, especially around this area of European resilience, defense tech, space tech. Companies like ICEYE here in Finland, or the exploration company in Munich and France. So we're really bullish in particular about now and the path forward in the next 5 years.
Mm-hmm. Yeah, it's definitely amazing to see kind of the evolution of the European kind of startup market. I mean, I've only kind of been in this space for 7 years, but to see the number of unicorns and large rounds that have come out. But kind of speaking like of those large rounds and those unicorns, practically every single one of them has at least one US investor. Some have more US investors than European investors. Can Europe and European investors build large companies without the help of US capital? Where would Europe be without kind of US capital?
I think it's a tricky question to answer because to call these US funds, let's take, Seth was just on the stage, Iconic as an example. So many of these US investors, right, are standing up offices in London. And so, yes, it is, Andreessen on the cap table, Bessemer on the cap table, Iconic on the cap table. But a lot of these investors are from the ecosystem, have grown up in the ecosystem, speak the language, have the networks. And so I think of them as maybe not as European native as, let's take a Creandum as an example, but they are not just, US investors flying over for 24 hours to issue a term sheet and fly away.
Yeah. I mean, Alex, you're based in London.
Yes.
What is kind of that advantage for not only you as an investor, but also your portfolio companies and other startups that you might be investing in to have you on the ground in Europe instead of in New York or Silicon Valley?
Well, we're one global fund, so it's not like a separate fund in Europe versus the U.S. And we collaborate. So when I find a company and invest in a company in London or Europe, sometimes they're like, first off, I should say there are a whole set of companies that are selling not into the U.S. but into the domestic market, and so for a lot of those companies, it really doesn't make any sense for them to raise money necessarily from an individual in the U.S. But for the companies that are looking to sell into the U.S. market, into the global market, what we do is we work together, and we'll loop in colleagues from the U.S. and try to help with intros, biz dev, and those types of things there, but also support them where we can on the ground in Europe. But on your question, I think the reality is, look, I mean, the U.S. has more than 10x the amount of venture capital that Europe has. But Europe has been growing really dramatically. I mean, again, when you look over the last decade or so, you've got all of these amazing funds that have emerged. The Baldertons, the Atomicos, Grandams, Northzones, Hoxton. I mean, it's like it's a very long list, and so I think it's catching up. And so I think one of the reasons we established the office in London is we saw that and we realized. At least my view was if we wanted to stay, I wouldn't say relevant, but if you wanted to remain kind of competitive, you needed to have a presence there because we're seeing so many great European funds emerge.
Mm-hmm. What is the relationship between kind of US funds and European funds? Is it a case of competition or is it collaboration? Maybe Gabriel, will start with you.
So the way that we see it is that we want to be part of the best companies. Mm-hmm. The earlier, the better. So in our case, like we try to do our job and try to find these entrepreneurs even at the pre-seed or seed stage. In Stockholm, particularly this year, we've done 3 investments that we're going to announce, and all of them are at the seed stage. So you could argue that we're potentially competing with local funds at that stage. But I do think that makes the market more dynamic. And the way that we see it is that we want to offer the best value for this fund. So I would say we're open to collaborate, obviously, but I think that our job is to find the best entrepreneurs as early as possible.
Yeah, I think it's very fund specific. I think, take us as an example. We view ourselves, rightly or wrongly, as selling a very different product than a European fund, which means we want to collaborate with them. It is very ideal for us, right? I led a seed in a London-based company, a larger seed in a London-based company called Annam last November. Concept was already on the cap table. I talked to Reese monthly, weekly on this company, and the value we add is quite different. I would not want to be with anyone else, on this cap table because having boots on the ground kind of in London is quite valuable for us. On the flip side, I think, these European funds that are here, they have a lot of value to add, particularly as it relates to helping attract talent if they're building out, their engineering base here that we just don't have given our resources or where we're based. Again, I think when you've built out more of a presence here, perhaps it's a little bit more competitive. But I think a lot of US funds are quite excited about the collaboration opportunity, particularly because they want to write larger checks, right? I'm coming in at Series A, we might be coming in at Series B. And so the fact that, the local fund wanted to lead the seed or even pre-seed doesn't really affect us.
Mm-hmm. It's interesting about kind of value add, because obviously, founder looking at raising funds, they're not just looking at capital or money. Yeah. They're looking at, experience, knowledge. So I guess it's interesting because we've got different perspectives here. So from a US only and then, kind of boots on the ground perspective, what is the value add that a US fund can offer European startups that local investors couldn't? Yeah.
I mean, I would say as I look at whether it's Annam, Lagora, you go down the list, a lot of the European startups who I would say have chosen to partner with Redpoint have either fully moved HQ to New York or the US in general, or have opened a very meaningful presence in the US. And so oftentimes that is happening in kind of the 12 months post our investment because they want to make greater both team and go-to-market investments stateside, which again, I think leads them to want someone on the ground there that's spending time with them there, that can get them set up with a visa, office space, an early team, what have you. Again, it's really a question of founder preference, what their needs are at this stage of the business, which again, can vary dramatically as a 10-person team versus a 100-person team.
Yeah, I mean, we have people on the ground in London. We just brought on a woman, Michelle Chang, is our European talent leader, who's helping our companies with recruiting in local markets. We just recently invested in a defense tech company called Auterion. We led a $130 million round there and helped them in terms of PR. We have Bryce Keane has been working with us as our kind of PR consultant in that respect. So there are a lot of these sort of tactical things that we're helpful with. And I think it really does help when you have somebody in the time zone, in the geography that you can meet, face to face for coffee. And then, I also wanted to add your question on collaboration. It's just worth remembering as venture investors, we're minority investors. We may own 5, 10, maybe 20% of a company. But when you contrast that with the private equity investors who own a majority of the company, in private equity, those funds are competing full stop. Only one, there's only so much of the cap table to go around. In this case, we've co-invested with Redpoint, we've co-invested with Andreessen. We were talking backstage about how, Legora was one where Redpoint invested, and then we came in more recently. My partner Samir led the last round to back Max. So, there is a lot of collaboration that we're seeing both with the U.S. funds, among the U.S. funds, as well as, with the European funds.
Mm-hmm.
I would like to add for us is that, we are 600 people at the firm. And we have a dedicated team on the go-to-market side that has 100 people that their entire job is to build relationships with enterprises around the world. So in Europe, Asia, Latin America as well, beyond the United States. So one of the things that we try to offer for founders is that, if you're selling on the B2B side, we can help you with introductions to all these large enterprises around the world. On the talent side as well, we have a team of 50 people that just help our companies recruit talent. And we have these networks all across the world as well. And this is why we also spend time at the university level, at CDTM, at ETH Zurich, so that we can attract the best AI talent for our companies. So in that sense, we try to be a little bit more full stack and be able to offer this value proposition to the founders in Europe. And I think the most appealing argument for them is that eventually, if you're selling in B2B, the largest market ends up being always the United States. So creating, a landing pad for these founders to come to the US and dominating the US successfully is a great example. So this is, one of the companies that we've done this is 11 Labs, right? So we help them set up the office there. We help them recruit the people early on. And now, you can compare the density of the talent that they have in Europe and the US is kind of very similar. So that's kind of how we think about it, which is, we want to be your global partner, and this is why we have 600 people working on this day and night.
So all three of you are from 3 incredibly well-known brands. So I'm sure you get hundreds, if not thousands, of pitches from not just US founders, but European founders every single week. So kind of broadly, what are the biggest misconceptions or mistakes that European founders make when they pitch you and just US firms in general? Maybe Alex, start with you.
Well, first, thanks for the kind words. But gosh, the biggest mistakes. I don't think it's any different from the U.S. founders. I don't think there's it's sort of like a bit of a snowflake in the sense that every situation is unique. So I wish I had a better answer. But I think the founders we meet with across Europe have just as much ambition. They're just as compelling in terms of the way they're pitching us. And if they kind of make errors, they're often just kind of one-off type situations.
I think it culturally changes a little bit. So I'll give an example of the Nordics because we're here. But sometimes on the storytelling side, when you compare them with the American founders try to hype it up, 10 times more. And then sometimes that I work with the Nordic founders is they deliver a lot, but they maybe don't sell the story the same way that the Americans do. And this is one of the things that we try to help them because I think towards the end is what gets investors excited around the world is the ability to tell this story so that you're magnetic, not only attracting capital, but also attracting the best talent because eventually you're competing at the global stage. So that's one of the things that we try to work on. And, I would say that's kind of the main difference that sometimes we try to adjust. And it's hey, if this person says that it's going to deliver 3x, it's probably true. In the US, if somebody tells you it's 3x, you're okay, maybe it's 1.5. So that's kind of the main differences that we've seen so far.
Yeah, it's interesting because there is always that kind of cultural debate, European versus US founders, that US founders are more ambitious, more bold. And, I wonder, would European founders be more successful, not just in pitching, but also building their startups, if they were to emulate US founders more? Or should Europe keep kind of more of take a different approach and keep kind of something a bit different than the US?
Yeah, I mean, I think it's a balance, right? Because you need to cater to your audience. And at the end of the day, like for better or for worse, you are selling to VCs. Like you are burning cash every month. You need money from them. And so there is an element of, sure, you refine the story and pitch it in a way that connects with them. That said, like you got to play your own game. And for a European founder to say, I'm going to copy paste the lines of a 20-year-old dropout from Stanford, it's just like not who they are. I think the difference, particularly today, we've seen between American founders, or let's say Bay Area-based founders, which I think are quite different than New York founders, and European founders, is in the Bay, like nothing against Bay Area founders, but it is quite easy to be a founder. The like most obvious answer for a lot of these kids is, I don't really know what I want to do, but I know I want to be a founder one day. Why don't I just try this at 22 because I have nothing to lose? So it's almost the like de facto next step. On the flip side, in Europe, it's a much more intentional decision to go down that path, leave everything behind, start recruiting a team or what have you, which I think creates, again, going back to the durability as a statement, I think it creates probably a little bit more durability or grittiness. That these founders are not just in it for the Bay Area, let me pitch you, see if I can raise, and if not, I'll go work at OpenAI. Like, they're in it to win it. And so I think, like leaning into who they are and like what makes them different is only going to benefit them. Because at some point, if you are playing someone else's game, like, that person will probably win.
I think Meera is totally right. I mean, I think I would not encourage founders to do anything. I think that you need to be genuine. Yes, you have to sell, but you have to sell in your own genuine way. And I think when you veer away from that, I think not just investors, like people pick up on it and they realize that you're not being authentic. But you're hitting on I think another question about is there any difference between ambition between the European founders and the US founders? And because we get that question a lot, and I think it's absolutely not. But I will say one of the things I've observed that I think is a real challenge across Europe is that a lot of the European companies, they sell too soon. And when I say too soon, it's in terms of like what's in the best interest of Europe, what's in the best interest of the overall ecosystem. It's a personal decision. They're making the best decision for themselves and their stakeholders. But I think that's really one of the challenges when you see companies like Sana Labs and these companies that sell out, or DeepMind being the kind of canonical example people talk about. But I also think that there's just a reality, which is if it's your first startup and someone shows up, you own 10, 20% of this thing, and someone shows up with $1 billion offer, and this is your first startup, it's really difficult not to, ring the bell. If you're, and there just are more founders in the Bay Area and in the US in general that have, $10 million, $2 million, $10 million, $50 million in the bank account, and at that level, I think you can afford to be like a lot more ambitious, right? If you're on your second or third startup. And so, I just sort of tie it back to the fact that I think as we're now seeing this kind of second, third wave of founders move on to their next companies, I think we're going to see more large, enduring companies get built across Europe because these founders won't, have as much of a, a need to sell at earlier stages.
Yeah, I think the other thing that I'm curious to see how it plays out, or if you guys have any opinion, is yes, you're seeing some of these second-time, third-time founders who have a little bit more of a financial cushion. You are also seeing in today's super aggressive risk-on environment a lot more secondaries at play, even at the Series A, where people are taking $2, $5, $10 million off the table in the first, call it 2 to 3 years of building these businesses. And we've definitely seen this with founders where you see a slight sigh of relief with I can actually go all the way, I want to go all the way, but I can also buy my parents a house because I've sort of built that in. So I'm curious to see how the secondary dynamic, which some people think is horrible, some people think is amazing, it is what it is, but if it shifts the mental math of some of these founders surrounding exits.
I think, I just wanted to address some point before related to this, which is, I'll give the example of Lovable. Like Anton, the message that he's giving right now is that I'm going to build the first $1 trillion company out of Europe. And I think that level of ambition or like that messaging really resonates with talent. I've been fortunate enough to meet a lot of people that have joined that company. And like the level of talent that you see there is like a high density. And a lot of the messaging is like, yeah, like this is one of the few companies that has this kind of like mission of like, hey, let's make Europe like the standard, and that we can also build like $1 trillion companies. So I think that messaging is quite important. I think on the topic of secondaries, it is something that comes quite often. I think everything in excess is what ends up being like the detrimental side of it. I do think that there's a combination where like, yeah, if you can have some of the secondaries to be able to afford a better lifestyle, but also maintaining the incentives aligned, I think that that's probably the most important thing, which is like, hey, I want you to do well, but like I also, as an investor, I want you to be completely committed to the company and making sure that we're not getting ahead of the success of the company, and make sure that those milestones are tied. And you know, like in the extreme of these examples is like the highly debated paycheck that Elon just got, right? By the way that he manages the company, and like it was highly debated, but it was, you know, on the good side, you can argue that it was incentives aligned, right? So it was based on performance. So I do think that there's probably like an in between, but the excess probably ends up being the bad side of it.
Yeah. I mean, we are seeing from our data at least that although in the past European startups have been known for selling quite quickly, it's actually kind of spreading out the time between like founding and exit. So hopefully we'll have more of these kind of bigger companies emerge out of Europe. But I mean, as we're talking about bigger companies, most of them having been funded at least in part by US investors. For them, obviously, it makes sense, but does it make sense for all European startups to be seeking US capital? Or in some cases, is it a good idea to just stay local?
I think absolutely. I think it depends on what your goal ultimately is. Looking at our fund size, right? Redpoint is the smallest of all three. And as we sort of think about underwriting today, it's a question of, can this be a $5 billion company, if not a $10 billion company? Like that is our bar, and if it's $100 billion, even better. I suspect these two funds are quite similar. Not every company should be a $5 billion outcome. A $500 million outcome for many, many founders is phenomenal. But if you have investors on your cap table that are looking for more, you see this like incentive misalignment that doesn't quite match. I think the benefit of some of the local funds is they are $50 million funds, $100 million funds. And so for them to return the fund, like the fund math is just quite different. And so if you are keen to stay, you know, focused on local markets, if you are keen for one of these multi-$100 million outcomes, like, yeah, my personal opinion, I'd be curious to hear how you two think about it. But I think you are much better kind of sticking with rather European funding. And so it's just a question of that, yeah, alignment.
I think I agree with a lot of that. I think it's sort of you know, there's often a view among kind of some of the U.S. investors, and I think, you know, not to include the two of you in this at all, but that, you know, if you're building a company for the domestic market here in Europe, that it's just going to be a small company, and that you're not thinking big enough. And I don't think that is true. One, because we've seen data points like, you know, the Revoluts of the world that have built, you know, 100 billion, you know, 70, 80, $100 billion companies focused on the domestic European market. And then, you know, two, we are seeing a whole host, especially in defense tech and space tech areas of advanced manufacturing. We're seeing a whole host of companies that are focused on the domestic markets that are scaling really rapidly. You know, the Helsings, you know, is another example, I guess. You know, and so I think, you know, there are a whole set of companies that we often are sort of not really talked about, which are focused on the domestic market. And I think we're just going to see more and more of these pretty large, interesting outcomes of companies that are selling domestically, whether it's defense tech, whether it's consumer, or other categories.
Mm-hmm.
I think our framework is, you know, is mostly like we have this thing called default global businesses, which is like if you want to build like an enterprise business, I think doesn't make that much sense to just do it locally. But there are businesses like it was mentioned, like default local. So like these are the ones that like have to deal with a lot of regulations. So like financial services is one of them. And not only Revolut, but like, you know, you also can look at Latin America, having Nubank or Mercado Libre, like 90, $100 billion market cap companies that are just in way smaller markets than Europe. Healthcare is another vertical that tends to be a lot of, because of all the regulation that you deal with, tends to be very local. So those, we're actually quite bullish for founders to kind of build on those segments locally. And when it comes to the global stage, if it's like enterprise or consumer, I do think that for those we do have to believe that this team has a right to win globally or at least compete. So that's the kind of like the framework that we think about it.
I think also there's totally agree with that, and like I think of healthcare, like Alan in France is a great example of that, and often it really helps to be in the local market to really understand the problem set. Like I remember, I'm embarrassed to say, like many years ago, I was in New York at the time, and I remember like I think Reshma from Seed Camp pitched me on, you got to meet Revolut, you should really meet Nick, it's an amazing company, and I kept thinking to myself, like, why does the world need another kind of consumer credit card company? Like, it just doesn't make any sense to me. And then 5 years ago, I moved to London, and I very quickly realized like why the world needs another, needs a Revolut or a Monzo or Starling or so forth. And and so I think just that experience of like being in the market, understanding the challenges, gives you a big advantage.
Mm-hmm. So for the founders who want to raise from funds like yours, where do they start? Particularly when you're not based here, but even if you are, how do they kind of get on your radar?
Okay, so one of the things that I run here in Europe is our scout program. So one of the things that we invest a lot is in training the scouts in kind of understanding. There's a lot of, especially young kids that are very interested in the profession of venture capital and investing. There are super connectors that maybe, we call them network rich, maybe pockets not so rich. So we want to kind of help them monetize this network. And for us, it's mostly through that angle that we hear about like the deals happening in different markets. We have scouts all over Europe. We actually host an event with some of them, operators and friends after. But we invest a lot in this program, and I think that has played out well for us in the short and medium term. So we'll continue to do that.
We try to be as rifle shot, I'd say, as we can, and we do it through what we call investment roadmaps, where we try to identify specific areas where we want to invest. An example, I mentioned defense tech a few times. We've recently published this European resilience roadmap where we mapped out 3 broad areas and 5 segments that we're interested in making investments in. One of them, we did an investment in drones. We've got another we're very interested in aerial defense. We're seeing that the growth in drone incursions across Europe, as well as ISR balloons and other things are creating opportunities for defensive capabilities there. And so we sort of publish this, and then we hope that some of the founders that are innovating in these areas will reach out to us, and then that's been a very effective approach for us. And
considering that you're not on the ground, nor is Redpoint, how can a European founder kind of get the attention of a fund that isn't based here?
Yeah, I think our jobs are both the easiest they've ever been and the hardest they've ever been in terms of the level of competition, but also the ability to find these amazing builders. I would say, we are looking all day, every day for these folks, and whether it is going through our network, talking to co-investors in Europe, like we are very much on the hunt, and so oftentimes we will find you. It just might take us a little bit of time. On the flip side, I would say a lot of our, best European investments have come from angels, pre-seed funds, local folks, on the ground that we trust. We try to be here as much as we can be, even if it's, flying into London for 48 hours and then getting back on a plane and going home. But I think, what's great about Europe is how collaborative the ecosystem is. And their excitement to kind of share some of their best founders with investors in the US versus hoarding them for themselves. And so, I would say out of all the challenges we have, finding these folks is not necessarily one that keeps us up at night. The competition side of things, I think, is a whole nother ballgame, though, for all of us.
Sure. We've got just about a minute left. So very quickly, if you had one piece of advice for a European founder pitching a US fund, what would it be? Let's start with Alex.
Oh, gosh, it's start with me. I'll selfishly say I would try to find folks on the ground that you can meet in person. I think, oftentimes, I think founders don't realize this, but like the Zoom, people get Zoom fatigue. The Zooms are often not as effective. I think if you can do it in person, it helps a ton. Whether that means meeting with us locally in London or, coming and meeting my colleagues or partners in the Bay Area or New York.
I think the one that comes often for us is just like I would recommend founders to be historians of the industry that they're trying to disrupt. So one of the things that sometimes they see that it lacks is that, trying to disrupt a specific industry, but there's been similar business models around the world that have succeeded around it, and there was like a clear path on how they did it. And I think that helps a lot when you're trying to build the business and kind of get the right advisors. And I think sometimes I see that disconnect from European founders from companies that have succeeded, have done this before, maybe in the United States or somewhere else in the world. So that would be my one piece, is like you kind of map out like the entire space and be a historian of that.
Yeah, I'll maybe take the other side of Gabriel's comment. No, I think being a historian of the ecosystem is incredibly valuable. It's much better to learn from other people's mistakes than your own. That said, I think past performance is not indicative of future returns, and like that's never been more true than the present. Today we are rewriting history. The way these industries operate will look very different 5 years from now than it did 5 years ago. The growth rates we as investors expect are very different, 5 days from now than we were expecting 5 months ago. And so to compare yourself to the past, to benchmark your businesses to prior businesses, I think is not necessarily playing the game on the field or like moving where the puck is headed. And so dream big and reshape these industries in really meaningful ways.
Perfect. Thank you so much. And I'm sure you'll be getting a lot of European pitches over the next couple of days. Thank you.
Thank you.
Thank you.